How's it going, everybody? This is Tim from Trending Money 2020, also Forex Now. Thank you for being here. Thank you for taking the time out of your day. I don't want to make this video super long, but I do want to break down a couple of things that we did promise to you, and that is our number one trading strategy that we have used for the past 25 years in our Forex trading and equities trading. And that is, it's a very simple strategy, and we're not going to waste any time. So let's just go ahead and jump into this. So first things first, all of our trading is based off of technical analysis. We get a ton of questions from people. Are you listening to news? Are you going to Twitter? Yada yada. No, none of that stuff matters to us because in our belief, it is all baked into the price action, and if we can just be good at reacting to that, then that's the ideal way to trade. So. What we are looking for specifically in trading is a pattern that is based off of psychology happening in the marketplace, and that is why it works, decades later. And that is called the first cross. It's a pretty simple, easy pattern to follow. It happens at least once a day. Depending on your time frame, I don't want to talk about time frames, but I would recommend anybody new to use higher time frames to kind of, give yourself a little bit of time to react. So the first cross. So what does that mean? First cross is essentially just that first bull flag or that first bear flag in a new direction. So how do we first start to define what a new direction is? Is it a breakout? Is it some sort of wedge? Whatever. Well, essentially what we can do, and I'm going to do this kind of quickly, is draw a trend line, and I'm going to connect it to as many very obvious levels as I can. My philosophy is the more eyes, or the more obvious the pivot looks, or the more obvious the swing looks, the more people are going to be looking at it. So that makes the most sense to me to draw from those levels. So if you take a look here, we are drawing here. So we have two levels. We also have another indicator that we're using, which is the MACD. It's a modified MACD. It's just a 310/16 oscillator. I don't want to take up too much time to talk about that because, to be honest, it's probably an entire different discussion in itself for a whole another video, and we can do that later on in the boot camp. But we are using this. If you want to follow along, just go to your broker, whoever your broker is, in your trading platform. Load up a MACD, change the settings to 310/16 in that order. Change all of your parameters there. So we're using this not as a reason to objectively enter the market, but we're using it as a reason to kind of gauge which side momentum is kind of moving in. So all this consists of is trend, which is our blue line. This is the slower line, right? So it's a lot less going on. And then we have a more static line, which is the fast line, which shows momentum versus that trend, right? So momentum or rate of change, basically speed, basically a lot of action happening in a certain direction. And that's what we want to capitalize on. Remember that this strategy is specifically for traders who want to make the most amount of money in the least amount of time, okay? So that's super, super important. That's kind of why we're all in this business in the first place, right? So what I'm looking for is this trend line to be broken. Okay, I need to see it break above. Right? If it breaks above, I like what I'm seeing. I look at the MACD, I see that momentum is now moving upwards. Okay, it's moving upwards. Now also, the slow line is moving upwards. So there's a slope. So what that tells me is there could possibly be a bullish momentum floating into the marketplace. And if I want to capitalize on that potential, I need to position myself relatively quickly to that trade, okay? So I'm going to zoom in just a little bit here so we can kind of break down the mechanics of trade location and risk management location, because it's super, super important. And this is another reason why higher time frames are so important, is you always want to give yourself the most time to react to what's happening. And if you don't give yourself enough time to react, then you might miss one thing, and one little thing that happens, could throw off the entire operation. All right, so we have this trend line break. We have a lot of momentum shifting upwards. If you want to talk technicals here, there is a divergence. It's a bearish or bullish divergence. It's not something I trade off of. It's just another thing that we can look at to say, oh, this could be the one. You know what I mean? It's adding confluence and conviction to every trade we place. Also, I do want to note that the bar that broke this trend line closed at the top of its range. It closed at the absolute top of its range. Okay, so we know from that. All right, this is where price action is super important. I think a lot of people get price action mixed up with fantasy patterns like falling wedges and double bottoms, and all of those things are good. But what raw price action is being able to understand what just happened in that time frame, in that period of time, or in this bar, what just happened. Well, a large enough amount of buyers bought at this level to where it closed at the very top of its range. And that's what caused the breakout. So it's super, super important that we remember that, right? Because that is where we're going to place our initial stop loss. And the reason we place our stop loss there is because if that level is broken, then you know that you're likely wrong on the trade because of supply and demand. I mean, we're just talking basic kind of like economic 101 here. If enough sellers close out those buyers to where the scale is reversed now, or the opposite is happening, and price has enough sellers to close out that large of a buy, then you know that fundamentally you probably are shifting to the other side. So that's super, super important to remember, and that's where we're placing our stop loss. All right, so I guess I can go ahead and draw that so we don't forget it. I don't want to kind of jump around here too much and kind of trying to keep this video as short as possible. So now let's talk about trade entry. So we've got all of these things happening. How do we take advantage of this little flag? All right. So what I need to see is the bottom of this, the absolute low of wherever this trend ended. This recent trend, this recent narrative that price is moving down may no longer be true, right? So the absolute low of that, I'm going to take a Fibonacci. Now, Fibonacci is, again, another weird thing that we don't really talk about too much here. It's just a weird thing that we follow. And the reason why we use it is because we need an objective way to enter the market. Too often do I see traders kind of mess up and they're picking like random levels to enter the trade, and they either end up picking a very bad position and their trade location is horrible, or they miss the move entirely, and we don't want that either. So a Fibonacci is good enough for me to just kind of like draw the trade, try to get it as perfect as possible. It doesn't really matter that much, but the better you can get it, the more it's going to make sense. So what are we doing now, right? So we know one thing for sure, that these flags are very, very quick. These quick little moves, very fast, and we want to take advantage of them as best as we can, right? So what I'm doing is I'll have a limit order just right above this 23% level, right? Once I get filled, I know where my initial stop loss is. Now, we don't have a profit target yet, and we're going to talk about that, but I'm going to get rid of this Fibonacci so we don't turn this into a coloring book. Very sorry, my throat is kind of dry here. But now we're in a trade. We're in a trade, and we have an initial stop loss. It's a pretty strong level that we know for a fact. Okay, if this this bar gets closed, we're probably moving downwards, and we should just take our loss and move on. Now, does our risk stay like that forever? Absolutely not. And we don't do that. But we do need to come up. Excuse me. We do need to come up with a profit target for sure. And how do we do that? So we do need to come up with a profit target, right? So how do we come up with that in a way that is objective enough for us to follow and kind of get as close as possible to a mechanical system or something, right? How do we keep this fully objective? Well, There are a couple of things you can use. You could use a Bollinger Band. You could use some sort of trend line bounce. You could use something right now, just because this is kind of a really tight flag. What I like to do is just take the high that broke, right? So the whole reason we're entering the trade in the first place, which is this level, and connect it across something obvious. This is just, we're kind of breaking down price action in a different way that maybe some of you aren't ready for yet, but and I'm just extending it right. I'm extending it all the way to the right, and I am expecting price to go back up to that trend line. All right, that's my roadmap, and it's a good roadmap. Typically, it's a good roadmap just a little bit more than 50% of the time, which is pretty much all you need. So once this bar closes, all right, let's talk about risk management. We're about 10 minutes into this introduction to the whole boot camp that we have planned out. We have a stop loss that was initially placed here. So if our profit target is here, there's one thing about trade management is it doesn't look right? Our risk to reward is like slightly in the favor of risk. We need to change that in real time. All right. So as price starts to move up, as something closes and favorably, the first thing we're doing is moving our stop loss up as quickly as we possibly can. Now, this is a very small, short move. So most of you wanted this to be done intraday, so sorry about that. So some of these positions make a lot more sense on higher time frames. But one moment. Okay. So we need to be very, very, conscious of the fact that this move is going to happen very quickly. It's something we have to keep in the back of our head. So as price begins to rise, we are taking our initial risk from here and we're moving it up maybe this level. Okay, it's still moving up. We're trailing our gains at this point. Maybe we didn't fully stop ourselves at that profit target, but we're not focusing on that. Sometimes you just have to let things run out. And I know that's a very subjective thing to say. There's a lot of debate on what it means when people say let your profits run. But you just kind of need to have at least some sort of roadmap to know where price could be heading from here. And as that happens, don't worry about trailing your stop. Don't worry about managing your profits up here. Worry about closing this. Worry about closing the gap between your entry and where your initial stop loss was. The smaller that gap gets every time you trade this strategy, the smaller you can get it, you're going to make money because you're always in a balanced risk reward scenario. Even if you win 50% of your trades, you're probably walking with a profit at the end of the day, right? So, as price is starting to close higher bars. Now, another thing you could do is, I know a lot of traders who use this who will go after something like 2 bars up and then take their profits. And that's a recurring theme we see in our research more and more and more. That works also. So there's just a couple of things you can kind of do to figure that out, where you want to place that, right? But we know that this flag is happening and we have to capitalize on it now. And the most important thing is that we are constantly shifting our risk to follow where to get closer to where our entry point is. Close that gap. That is the key. That's the absolute key to maybe any scenario, I guess you could say, or any trading strategy that you follow. It's closing the gap. So again, I'm going to just kind of recap this trade, and we can go move on to the rest of the boot camp this week. But we had we had a high and a lower high. We formed a trend line. It got broken. We had a huge bearish bar come in. It closed at the absolute high of its range. Momentum is shifting upwards. We're starting to move up. We know that there's going to be some sort of leg up from here. We took advantage of that. We placed our risk. We managed our risk, and this trade was profitable. Now, we're constantly doing this, okay? We're doing this on the other side of the market, and we're doing this on pretty much any side or any place we can find these flag opportunities where price is breaking out. that is the #1 trading strategy that we focus on. And we're going to do a lot of this stuff live this week. So if you're interested, stick around. Again, my name is Tim from Trending Money 2020. Thank you for checking this out. I'm going to go hydrate because I've been not hydrating. So we'll see you guys this week. Thank you.